Hey guys, welcome to the trading channel. As you can see on your screen, we just got involved in a live advanced pattern day trade here on the Aussie Canada. I'm going to be letting this trade play out as we go through today's video, and advanced patterns are by far one of my favorite ways to use Fibonacci retracements and extensions to trade in the market. But today I'm also going to go over another way we can use these Fibonacci retracements and extensions to day trade, to swing trade, and even to get involved in some long-term positions. I'll be showing you guys a couple of live day trades that I took based on the things we're going to discuss in this video. So if that sounds interesting to you, then make sure you go ahead and click that subscribe button to be alerted when we come out with other educational content, as well as our Monday market breakdown videos each and every Monday. Also click that like button for me while the intro and disclaimer roll to help support the channel, and I'll see you guys on the other side. Okay traders, let's go ahead and discuss a little bit about what we're going to look for while day trading today. What we've done is combined Fibonacci retracements and extensions with actual major and minor levels of structure in order to create accurate trading opportunities. So what I'm going to do is draw something like that out for you. So let's say we have a market that is coming down, currently in a downtrend, and then this market starts to consolidate and we break out to the upside. Now, as technical traders, we know after that breakout, we're likely to continue in that upwards direction, and the first place we want to look for trading opportunities might be right back here at this resistance level. Well, that's great, but what if we could also add Fibonacci retracements to that as well? What if we had a 382 retracement lining up with those resistance levels? Would that not make this trade have a higher probability of being a winning trade? Well, the answer is yes, it actually would. If you end up with a Fibonacci retracement level that lines up perfectly with a resistance or support level in the past, it can make for a pretty accurate trading opportunity. And what we would be looking for is a pullback into that area and a reason to go long, some kind of reason to enter the trade to the long side. And we're actually going to take a look at a live trade we took today based on this exact analysis. So let's take a look at one other example. This would be an example of using this in a reversal scenario. Another way we could use this is in trend continuation. So let's say we have a market that's doing this. It's already reversed. Now it begins to go higher. At this point, we all know that while a market is in trend, previous structure resistance can become support. And also previous support could become support. These two areas where my orange lines are at the moment. So what we could do is take a Fibonacci retracement and only trade that structure level if it lines up with a Fibonacci retracement. You see that comes right in, that previous resistance level comes right in that 50% retracement mark. And whenever we have multiple swing highs up to swing lows, we can actually get an area that has multiple Fibonacci retracements as well. As you can see there, we have a 382 lining up with a 618 right in this area. So that would be a probable zone. What that really means is that even if we got involved right there at that 50% retracement, we definitely want our stop loss to be under that area where we have confluence between the 382 and the 618. So these are some of the things we're going to be paying attention to today as we go through the market and take some trades. Let's go ahead and take a look at one of our live day trades combining Fibonacci retracements with major and minor levels of structure. We ended up with two winning day trades based on this analysis today, so let's go ahead and take a look at one of those. So this is definitely another one of the ways we can use Fibonacci retracements to create a trading strategy. So as you can see, looking left, we have structure right here, this previous level of resistance, and actually this whole period of consolidation the market just broke out to the upside from. Market just came from here, broke out of this period of consolidation to the upside. Once that's happened, now the market is pulled back down not only to this previous level of structure, but right here to this 382 retracement. So almost using Fibonacci retracement to help us capture somewhat of a reversal. The market previously moving down pretty quickly, then creating this period of consolidation in here, then breaking out of that period of consolidation. Now we're looking to see if we have one, a level of previous structure, and two, if that level of previous structure lines up with the Fibonacci retracement. So combining Fibonacci retracements with structure can be a very beneficial way to create a trading strategy around fibs. So what I'm going to do is actually let this candle close. We're going to see if this candle closes above the 382 retracement. If it does, we're actually going to go ahead and take out a position, pretty aggressive entry here on this trade. We'll put a 2 ATR stop after placing that entry. This candle's got about 4 minutes and 20 seconds till it closes, so I'll be right back to let you guys know whether or not we got into this trade. All right, traders, so we ended up getting filled. As you can see, the market did close above that 382 retracement after coming down and touching it. So we touched that 382 retracement and we saw some buying pressure directly after touching it with this candle wick, which allowed us to be able to enter the trade. We went ahead and put a stop loss 2 ATR below our entry. What we're expecting to see is hopefully this market continue in this upward direction, breaking above resistance, this is where we'll take off our first targets. It's around a 1-to-1 risk reward to that area. Then we'll let this position ride up if it continues in the upward direction and try to get some pretty good second targets out of here as well. But that's what we're expecting out of this pullback, combined with structure, combined with Fibonacci retracement trade. All right, guys, so another update here on the Euro New Zealand trade. As you can see, we ended up placing that trade based on the close of this candle as we had some buying pressure from this 382 retracement. And the whole reason we wanted to get involved in this is because this previous level of resistance where we had a period of consolidation, the breakout here, followed by the retracement into that previous level of resistance, which just happened to line up with the 382 retracement, which can be a very powerful addition to a trading strategy. Having these Fibonacci retracements line up with structure can really make for some accurate places to place trades. So as you can see, the Euro New Zealand now just a couple of pips away from hitting our target. And there we go, guys. We ended up, those first targets came off. We're now going to move the stop loss up to break even. We're going to see if we can get some trend continuation here out of the Euro New Zealand. So guys, back on this Euro New Zealand chart, you can see that we're now breaking into some good trend continuation, which is exactly what we wanted to see happen based on this Fibonacci structure strategy. So waiting on that push up for trend continuation, what we're going to be looking at is back here, this previous resistance level is now going to be where we place our second targets. So we're going to be looking right up at the 1.6884 level for the second targets on this trade to be taken off, which will put us at around a 2-to-1 risk reward, about a 1.87 risk reward on the second part of that position. So that's what we're looking at here on the Euro New Zealand. I'll keep you guys updated as this trade plays out. Getting pretty close to second targets now here on the Euro New Zealand trade. I'm going to let this video run and see if we don't hit those second targets so I can capture it live. So we'll see what happens here. And we'll go ahead and discuss a little more about Fibonacci retracements and why combining those with structure made this such a powerful trade. One of the reasons is because we had this period of consolidation back here. So this was a major factor in placing this trade. The fact that the market consolidated here meant that we had a lot of indecision in this area. And then the market made a decision. It made a decision by breaking above these previous highs we had in consolidation. Once we made that decision, once we broke above those highs, our first place to take a look for trading opportunities is always back at that previous resistance level. That's our very first spot that we want to be looking for a possible long opportunity after breaking out of a period of consolidation. So that's already a pretty powerful move just based on structure. But then when you add Fibonacci to that as well, and you end up with a 382 retracement, one of our major Fibonacci levels right here at the previous level of structure, that can really add to the accuracy of waiting on that pullback into previous structure whenever you have this Fibonacci retracement there as well. Because now not only do you have people that are trying to trade the breakout pulling back into resistance, but also you have people that are trading some kind of 382 Fibonacci strategy as well. And it ends up making for a pretty accurate trading opportunity. So that's what we were looking at. Doesn't look like we're going to hit targets quite as quickly as I thought. So what I'm going to do is probably just go ahead and pause the video and I'll come back and let you guys see once we've hit those second targets. So there we go, guys. We ended up getting filled on the second part of that position, hitting our second targets for a little over a 1.8-to-1 risk reward here on this trade, and making for a pretty good day trade here using these fibs combined with structure. So I hope you guys enjoyed seeing that trade live. So here we are back on that advanced pattern trade from the beginning of the video. This was an advanced cipher pattern we took a look at before the intro on the Aussie Canada. And as I said before the intro, advanced patterns are one of my other favorite ways to trade using Fibonacci retracements and extensions, because they can produce some pretty accurate trading opportunities. The cipher pattern, for instance, can have an accuracy up to 70 to 75% when traded on the correct pairs and with the correct ratios. So I just wanted to give you guys a look into this trade, and if you're interested in learning more about advanced patterns, learning the ratios that I personally use, along with learning where I put stop losses, targets, how to backtest these patterns, and create a trading plan around them, then we have just released the Advanced Pattern Mastery course, and we are currently doing pre-registration on that course for 50% off. So if you'd like to get a little more exclusive training on advanced patterns and have a chance to sign up for the Advanced Pattern watch list, where I'll be sending you the advanced patterns that I'm looking at trading 3 to 5 times a week, then you click the link in the description labeled Advanced Pattern Mastery course. Otherwise, we'll see how this trade plays out throughout the rest of this video. And also, I'm going to show you guys one more look at using Fibonacci to capture some profits during a day trade. So now let's head to the euro dollar and take a look at another day trade combining Fibonacci retracements and structure. Alright guys, so here's another example of something we can use to create strategies based around Fibonacci retracements. We have a level of resistance here. The market just broke above, putting us into trend continuation. Well, we pull a retracement from our swing low up to our swing high here, and then we just see if there's any retracements that match up with that previous level of resistance. As you can see here, our 50% retracement matches up really well since the market pushed down with this wick all the way down to our 618 retracement and got sucked back up. That's indicating that we have some buying pressure right around this previous level of resistance, along with matching up with these fibs, which can indicate that we could see some trend continuation out of this market. So that's what we're looking for here out of the euro dollar. I'll keep you guys updated on how this trade plays out. All right, traders, so here we are back on the euro dollar chart. Here on this chart, if you'll remember from earlier in the video, we were actually looking at this previous level of structure lining up with a 50% retracement right here. Directly after that, we got some good wicks to the downside, right at that 50% retracement, showing us some buying pressure and allowing us to go ahead and open a position. We ended up with a stop loss that was 2 ATR from entry, and we've already hit our first targets on this trade, so our stop loss is at break even. And what are we looking at for second targets? Well, actually, we have to zoom the chart out, and we're probably gonna have to go up a time frame because I do not see levels of structure looking left on the 15 minute. So we'll zoom out to the hourly. So it looks as though we're currently right at a previous level of major structure. So we're going to go ahead and take off the second part of this position if we get back up to this level yet again. So we'll scroll the chart back over. And this is analysis that I should have done pre-trade. I should have done this beforehand, but I did not. So, and the market hasn't quite got there yet. So if we make it up to this level, that's where we'll be looking to take off the second part of our position. Let's go ahead and zoom back down to a 15-minute chart. So here on the euro dollar, we're looking at the 1.2014 level for the second part of that position. Currently, we've already won first targets, and we have our stop loss at break even. So I'll go ahead and pause the video, and I'll keep you guys updated as this trade plays out. All right, guys, so we ended up getting filled those second targets here on the euro dollar trade. Second targets came in at 27 pips, which was a 2.24 risk reward on the second part of that position. So there's a couple of trades based on Fibonacci retracements, combining that with previous structure levels in order to capitalize on trend continuation trades. All right, traders, so back here on that Aussie-Canada trade, as you can see, we finally did hit those first targets here on this advanced pattern trade. And another thing we discuss in the advanced pattern mastery course is how to trade these patterns in trend and against previous structure, which can really add to the accuracy and also can allow us to take much larger targets on these trades. So again, if you'd like to learn more about that course, you can click the link in the description. We also have a training program called the EAP. In that program, you'll be receiving 3 to 5 email analysis trades from us each week, and also a full extensive training course on the strategies that we use every day in the markets. So if you're interested in that, you'll also find a link for that in the description. Otherwise, I hope you enjoyed today's content. I hope it was valuable for you. Don't forget to go ahead and click that subscribe button if you'd like to be alerted whenever we come out with other educational content. Go ahead and click that like button for me before you go to help support the channel. I wish you guys the best of luck in your future trades. Stick around to read through some of the testimonials from people who have been in the EAP training program before, and I'll see you guys in the next video.